Hello, all of you. I hope you all are doing good. So today we are going to cover accounting standard 4, that is contingency and event occurring after the balance sheet date. Let me tell you that a very important point here. As you can see that the name of accounting standard is contingency and event occurring after the balance sheet date. Does that mean this contingency and event, both of them should be happen after the balance sheet date? The answer is no. The contingency and event occurring after the balance sheet date, first is a contingency part, that is a different thing, and event occurring after the balance sheet date, event occurring after the balance sheet date is a different thing that here. So mainly now contingency part now covered by accounting standard 29 that here, and event occurring after the balance sheet date, it is covered by accounting standard 4. So we'll discuss in detail what do we mean by contingency, even though it is a part of accounting standard 29. And what do we mean by event occurring after the balance sheet date, that is going to be dealt by AS4. So we'll discuss both of them here. So as you can see that here through the chapter roadmap, what we are going to cover first is introduction, then contingency part, accounting treatment of contingent losses, accounting treatment of contingent gain. So this is covered by mainly accounting standard 29. Still we will discuss it here. Okay. Now, event occurring after the balance sheet. Now, mainly this is covered by accounting standard 4 here. Now, there are two types of event: adjusting event and non-adjusting event. Special cases: event indicating ceasing to be going concern, dividend declared after the balance sheet date, and backdated check and disclosure. Okay. So let's start it with introduction part. Then I will discuss one by one each of them. Now, they say that here accounting standard 4 says applies to contingency only when no other accounting standards covers them. Now listen carefully. Mainly contingency, this provision, a accounting standard 29, the name of accounting standard 29 is provision, contingent asset and contingent liability. So mainly accounting standard 29 deals with provisions that here. So AS4 does not deal with those provision or any contingency which deals by accounting standard 29. But if any other accounting standard does not talk about those provisions, then that is going to cover under accounting standard 4. Let me give you an example that here. The provision for bad and doubtful debt that here. What happened? It's a provision, because when I'm saying provision for, okay, so when we heard the word provision for bad and doubtful debt. So you say, oh sir, it's a provision. It should be dealt by accounting standard 29 because the name of AS 29 is provision, contingent liability and contingent asset. So let me tell you that your provision for this doubtful debt does not cover by accounting standard 29. You will say, sir, why? Why accounting standard 29 does not deal with provision for doubtful debt? The reason is that we call it provision for doubtful debt, but this is not provision. If we go to the definition of provision, okay, that's covered by AS 29. If we go in detail, the meaning of provision for doubtful debt basically does not fulfill the criteria to call it a provision. Why? Because one of the conditions to call it a provision, there should be probable outflow. What I'm saying that here, to call something as provision is one of the criteria. Okay, we'll discuss in 29, AS 29, but I'm telling you, one of the criteria to call it as a provision is that there should be probable outflow of the fund in future. But when I say that, when I say provision for doubtful debt, it means I have a doubt that I am not going to recover the amount in future. Is there any probable outflow here? The answer is no. Okay, the answer is no. So if there is no probable outflow, it by definition, it is not provision as per accounting standard 29. So it does not deal by accounting standard 29 because provision for doubtful debt, there is no probable outflow. So this provision does not deal by AS 29. So that kind of provision will cover in AS 4. You got the point? So they say AS4 revise applies to contingency only when no other accounting standard covers. No other accounting standard covers them. Okay. So they say example, provision for bad and doubtful debt, there is impairment of receivable is covered under these standard. So why provision for bad and doubtful debt cover here? Because it does not cover by accounting standard 29. Why it does not cover by AS 29? Because in provision for doubtful debt, there is no probable outflow. And as per AS 29, the definition of provision, one of the criteria to fulfill the definition of provision is there should be probable outflow. In provision for doubtful debt, there is no probable outflow. Okay. AS4 deals with treatment and disclosure in the financial statement of event occurring after the balance sheet date. As I told you that here, we are talking about the event occurring after the balance sheet date that accounts and force deals with. But here, we'll discuss about this contingency part, and this treatment is as per accounting standard 29. Okay, now it is covered not under AS4, it is covered under AS29 that year. Okay, if there is any provision which is not covered by AS29, then that will those provision might cover under accounting standard 4, like the provision for doubtful debt. Okay, now come to AS29. What it says, the small portion of AS29 for reference purpose I am discussing with you. Okay, mainly AS4 deals with the event occurring after the balance sheet date. To understand what is this, they say contingency is a condition or situation, the ultimate outcome of which might be gain or loss, will be known or determined only on the occurrence or non-occurrence of one or more uncertain future event. It means there is some uncertainty. We don't know what will the final outcome will come. We don't know what will the final outcome will come. For example, that here, the case is going on against the company in court that here. We don't know that here what will the final outcome. We don't know what will the final outcome. Okay. So they say accounting standard 29 says that here, if it is highly probable that there will be loss. Okay, if highly probable means more than 50% chances are that you are going to lose that case, then make a provision as per AS20. When we make a provision, suppose I'm giving an example, the case is going on against the company in court that year. So I don't know, that may be, it's an uncertain event. I don't know that the result may be favorable or unfavorable. I don't know that yet. So what is going to happen? We have no idea about it. Okay. But I asked to my lawyer, what is going to happen? That they say the probability to lose the case is more than 50%. So AS29 say make a provision. Okay. But if the probability is 50% or less than that, they say don't call it provision, don't account it, call it as a contingent liability. And you know that contingent liability, we don't do the accounting of contingent liability, we record in notes to account. So we record as a contingent liability, will inform that the case is going on against the company in court. So it's a contingent liability. Why it's a contingent liability? Because chances to lose the case is 50% or less than that. If it is more than 50%, then we have to create the provision. But they say that here now, in case of remote possibility means very negligible chances to lose the case. It is not defined in law. Say in general, I am saying it is less than 5%. So it is not mentioned in accounting standard less than 5%. For your understanding, I am saying remote means very negligible chances. So let's say less than 5% that year, the chances that you are going to lose the case, they say no treatment. What do you mean by no treatment? No need to create a provision. No need to even write as a contingent liability notes to account. No need to inform that here. Okay. Because chances to lose the case is negligible. Okay. But it might be happen that it may be contingent gain. Okay. So we might win the case. They say contingent gains are not recorded in the financial statement. Why? You know the conservatism approach that here. Conservative approach is what are expected losses that we have to record that here. Okay. If the probability is more than 50%, we record it as a provision that here. But if we are going to win the case, we don't record that here gain in the books of account, because it might be happen that we may lose. So they say gain. Conservatism approach says record expected losses, not gains. So when should we record this contingent gain? Only when reason they may and never actually realize it might be happen. So only when the gain is virtually certain. Virtually certain means almost 100%. Almost 100%. That is almost 100%. You got the point? What do you mean by virtually certain? Virtually certain means almost 100%. So when you know that already, if you win the case that year, then you can say that then we are going to record in the books of account. Now you're virtually certain. Let me give an example of this contingent gain. Your parents promise you, when you will clear the CA intermediate examination that year, they are going to give you MacBook. Just an example that year. Okay, you say wow. So after examination, can you record in your books of account that MacBook is receivable? No, it's an uncertain event that year. That's going to be confirmed by the future event when the result will come that year. Okay. Now website, you open the website, you write it down their roll number and all. Okay, you enter the button. Then what happened? Result comes and you see, wow, you clear the examination, CA intermediate examination. Now it's a virtually certain, because you clear examination. Now you can record in the books of account that that's MacBook receivable. When you receive, then that is the actual PP you are recording. But why? Now you're virtually certain. Almost 100%, even though hard copy is not yet come to you at your home, but still it is virtually certain that in that case only gain can be recognized, otherwise no. Okay, so this is about the AS29, but this part also come in AS29, but in much detail. Contingent liability, contingent asset, provision, all will be there in AS29. AS4 only deals with which is event occurring after the balance sheet date. Now understand this point. What do you mean by event occurring after the balance sheet date? Understand the meaning of that here. They say when this event occurring after the balance sheet date are those significant event, both it might be favorable or it might be unfavorable, that occur between the balance sheet date and the date on which financial statements are approved. So they say by the board of directors in case of company and by the corresponding approving authority in case of any other entity. So it says that in event, listen carefully, this is balance sheet date. This suppose 31st of March 2027. This is balance sheet date that year. Okay. And this is approval date. This is first is the balance sheet date and this is approval date that year. So what is going to happen that year? They say any event happen between these dates, then this is event occurring after the balance sheet date. Event occurring after the balance sheet date. So what do you mean by event occurring after the balance sheet date? It means after balance sheet date but before approval. So it might be happening. It is suppose on 31st of March 2026. That is the balance sheet date. Does that mean we are going to finalize the books of account on 31st of March 2026 only? No. That is the balance sheet date. We are going to finalize it later on, that when it is approved by the board of directors in case of a partnership formed by the partners that year. So any event happen after the balance sheet date before the approval, what we call them, that is event occurring after the balance sheet date. So when I say that there is event occurring after the balance sheet date, does that mean that here all event we are going to record? No. Wait. Listen carefully. So when I come to, first of all, you have to understand what do you mean by event occurring after the balance sheet date. Event happen after the balance sheet before the approval. Let me give an example. Fire occur event. Now my trade receivable, the debtors is bad debt now. Okay. Now he's insolvent now. If he's insolvent, bankrupt now. Okay. Event happen. Some event happen. It might be favorable, unfavorable. What should be the accounting treatment? I will come to that. But you have to understand what to mean by event occurring after the balance sheet date. Event happen after the balance sheet date before the approval. So 31st March 2026 is the balance sheet date and here 4th of April is what? The approval. For example, any event happen between these, and this approval date, any approval date, whatever I mean to say, it might differ, depends on what is the approval date for the company. Okay. In my example, suppose there is the 4th of April. So event occurring after the balance sheet date, and before the approval, and what we call event, that is the event occurring after the balance sheet date. Okay. So now we'll come to the accounting treatment that day. But understand, if any event happen after the approval, then it does not covered by AS4. Suppose fire occur after 4th of April in my example that year. Sorry, 4th of September, not April. 4th of September. Fire occur here that year. So I say it is after the approval date. So here it is not covered by accounting standard 4, not covered by AS4. Say okay, fire occur after approval date, record in that particular year. I don't care. Don't come here AS4 that year. Okay. To cover under AS4, event should be occur after the balance sheet date and before the approval. You got the point? Now, the same example they mentioned that here. 31st March 26, 4th of April approval date, and event occurring between these two dates. We call them event occurring after the balance sheet date. There is the event occurring after the approval. After the approval is not covered by AS4. As I told you, suppose the fire occur after the approval date. That is in our example 4th of September. Then 4th of September. Then it will not cover by AS4. Okay. Now very important point. Now these two events that here. These two events. Okay. Now listen carefully. These two events are two types of event that here. Adjusting event. And I'm saying non-adjusting event. I'm saying adjusting event and non-adjusting event. Okay. So if I write it down here. Listen carefully. So suppose here years end on 31st of March 26. Okay, 31st of March 26 here. And approval date is 4th of April 26. So this is balance sheet date and this is approval date. Okay, now please understand that here. Any event happen after the balance sheet date and before the approval, what we call them? We call them here event occurring after the balance sheet date. Event occurring event occurring after the balance sheet date. After the balance sheet date. Okay. These event might be a adjusting event. I will explain you what do you mean by adjusting and non-adjusting. It might be adjusting event. It might be non-adjusting event. Okay, now understand. You know what to mean by event occurring after the balance sheet date. And remember that here now. If any event happen after the approval, here if any event happen, that here if it is any event happen, so it does not cover by event after approval it happen. So AS4 does not cover to such events that here. Okay, now understand this here. So when I say that here now, event occurring after the balance sheet date, that might be adjusting event or non-adjusting. So we have to understand what do we mean by adjusting. They say they provide evidence of condition that existed at the balance sheet date. What does it mean that here the condition, these we are discussing about these event. Okay, now concentrate here, adjusting event. So when we talk about the adjusting event, the condition was existed on balance sheet date. What does it mean that here condition was existed on this balance sheet date that here? It means that here now there's some clue was present. Example that here, suppose here my debtors, okay, account receivable get bankrupt. But I knew on balance sheet date that here his condition, his financial condition is not good. It was known in the market that his financial condition is not good. So I make a provision here, but which is confirmed by when I came to know that that particular account receivable is bankrupt now. So what does it mean when we say adjusting event? Means condition was existed on balance sheet date. There was some clue on balance sheet date. So we call them adjusting event. Now, what do you mean a non-adjusting event? That in case of non-adjusting event means the condition was not existed on balance sheet date here. So they say non-adjusting event means the condition was not existed on balance sheet. Example, earthquake. So earthquake happened here. So we didn't know on 31st of March that earthquake is going to come. We didn't know that here. That's a non-adjusting event. So let's first talk about what is the treatment as per AS4 for adjusting events. So they say here the condition was existed on the balance sheet date. So what is the accounting treatment? Adjustment made to asset and liability for event occurring after the balance sheet date. Okay, event occurring after the balance sheet date that provides additional information. Means example that the account receivable is bankrupt now. So they give me additional information. Mr. A suppose is bankrupt now. Materially affecting the determination of amount. I made a provision by 5%. I'd say no, it is incorrect now. I made in past 5% only. Now it is confirmed that it is bankrupt. I'm not going to receive a single rupee now. Now I have to change in the amount also. Okay. Relating to condition existed on the at the balance sheet date means I knew that at balance sheet date his financial condition is not good, but now it is confirmed when I came to know that he is bankrupt now. Because that is the condition that which was existing on balance sheet date, which is confirmed now by this event. I get the additional information. Because of that additional information, my estimate gets changed. My amount gets changed because I created a provision by 5% only. Now we have to change the provision now. Okay. Now this is what adjusting is. What is the same? They say adjustment for loss on trade receivable due to what? Customer insolvency confirmed after what? Balance sheet date. So what they say that here now, what a requirement? Adjustment should be made. Adjustment should be made means we have to do the accounting. We have to do the record it. Record it means accounting we have to do. On which date? 31st of March 26. You say no sir, event happened after the balance sheet date, but the financial statement not yet approved. The financial statement not yet approved. So if the financial statement not yet approved, what is going to happen that we can do the changes. We know that here the provision for doubtful debt should not be 5%. This particular account receivable is bad debt now. He is bankrupt now. So we have to record it that here. We have to record it because the financial statement not yet approved. We can correct figure. We can record it there. Okay. Now what happened in case of a non-adjusting event? Non-adjusting event, I told you that here that do not relate to condition. Condition was not existed on balance sheet date that here. Okay. Now understand that here. Now they say here condition was not existed on balance sheet date. So what I will do that here? Should I record it? No. Fire occurred. Should I record it on 31st of March? No. Fire occurred in between these dates. That okay. So we are not going to record on balance sheet. It's a non-adjusting event because condition was not existed on balance sheet date. So what we will do here? They say if the condition was not existed on balance sheet date, we call them non-adjusting event. They say disclose it. What we'll do? We will disclose it. But very important point. Where should I disclose it that here? Because the financial statement is not yet approved. So we can disclose it. Yes. But where should I disclose? In notes to account? No, never. Listen, it will be disclosed at what? Approving authority report. If you write it down in your examination, disclose non-adjusting even in notes to account, you will lose marks. Don't say notes to account. It is very important where you have to disclose it. In approving authority report, example, director's report. Listen carefully. Example, director's report. Okay, director's report. If you write it down notes to account, you will lose marks. You will lose marks there if you write it down notes to account. No, never. Where we are going to disclose this non-adjusting event? We are going to disclose it in approving authority report, example, director's report. Okay, so adjusting event we account it. Non-adjusting event, we don't account it, we disclose it, and we disclose if it is significant. It means something, not for every small thing we have to disclose in approving authority report. It should be material. So we will disclose in approving authority report, example, director's report. Okay, now here you can see that here, adjustment needed disclose in approving authority report. See here, approving authority, okay, report to enable the user to make a proper evaluation decision. Example, plant got damaged due to occurrence of a fire happened. So plant got damaged. It's a material item, non-adjusting. We didn't know on balance sheet did, so we have to disclose it where? Approving authority. Perfect. So what we'll do that here now? You understand that here, introduction part, contingency part, event occurring after the balance sheet date, types of event, adjusting and non-adjusting. Now I am coming to special cases now. 3 type of special cases. Now listen me carefully. What it says, the special cases that it says that here, event indicating first A point, event indicating ceasing to be going concern. Now event was so severe that here it affect my going concern assumption. Understand this point. Suppose here balance sheet date here is 31st of March 26 that here, and this approval date, let's say that 30th of September 26. Here fire occur. You say, what's the problem, sir? Fire occur, it's a non-adjusting. I agree with you. It's a non-adjusting event because the condition was not existent on balance sheet date. I agree with you. Now you will tell me that here, sir, it's a non-adjusting event. It should be disclosed. It's a significant event. We have to disclose it. Where should we have to disclose it? We have to disclose it in approving authority report, that is director's report. I agree with you. But this fire is so severe that here it affects the going concern assumption. It's so major that here it affects the going concern assumption. So in that case, if affect the going concern assumption, it says that in that case, if affect the going concern assumption, that it says that here now we have to account on 31st of March 2026 on the basis of liquidation basis. Liquidation basis, don't worry, this one chapter I will cover the framework. Okay, so in framework chapter, I will tell you if going concern assumption is not present, in that case, we have to prepare the balance sheet on realizable value, realizable basis. We'll discuss in framework chapter. But here it says that here, even after the balance sheet date here, this loss by, for example, invalidated the going. It is so severe that the going concern assumption affected that here. If my going concern assumption, okay, going concern assumption affected that here, then in that case here, what we'll do that here, if the going concern assumption is no longer valid due to these events, financial statements are prepared based on liquidation basis. Liquidation basis means realizable basis. Okay, realizable basis. So we have to do that. That will cover in framework chapter. Don't worry, but remember these points. Okay. Now, second point is dividend declared after the balance sheet date. Now, please see here. First of all, suppose my financial year end on 31st of March 2026. Okay. Now here, the approval date is 4th of April 2026. Okay. So any event happen here in these 2 dates. Okay. What we call them? Any event happen. What we call them? This is the event occurring after the balance sheet date. After the balance sheet date, before the approval. Very simple. Very, very simple. Okay. After the balance sheet date and before the approval. Okay. Now, they say here, dividend, suppose dividend declare here, this specifically related to dividend. They declared the dividend after balance sheet date but before the approval. AS4 specifically says that here it's not accounted. Okay, it's a non-adjusted. They say no need to account it. No need to account. You're not going to account it that here. Okay, so we are not. You say no, but it might be a proposed before the there was a concept earlier that proposed dividend. Nothing like that now. Okay, so they say no. Dividend declared after the balance sheet date. Done. We are not going to record anything about the dividend 31st of March here. Not accounted on 31st of March 2026. it will be shown in what? In notes to account. Just disclose in notes to account that. That's it. So we have not yet approved the financial statements in notes to account. This is also important point. Now remember that here. In a whole chapter, whole account standard 4, where we have to disclose it in approving authority report. But remember that when it's talk about the dividend, where we disclose in disclosing notes. So remember these two blue colors is approving authority here. Non-adjusting event, approving authority. Here dividend point and disclosing the notes. Remember this point. An examination here in non-adjusting event, we don't account it, but we disclose it where approving authority report. When it's come to dividend, where we will disclose in notes to account it. Remember these 2 points, very important point. Okay, so we'll disclose in notes to account that here that we have declared the dividend. It will account next year, but we'll disclose in notes to account because financial statement is not yet approved that year. Okay, now understand the third point, which is what? Backdated check. What it says that here now, backdated check received from the customer after balance sheet. One correction is that here in Rapid G's book that here same example is mentioned that here, but here in 2017 is written. They cut it down, write it down 2026 there. Okay. Now, backdated check means backdated check received from customer after balance sheet is non-adjusting event. No need to disclose since it does not change entity's financial condition materially. Now understand what does it mean that here. Now suppose the financial year ends on 31st of March 26. I receive a check on 15th of April, suppose 26. And when I see check, it is mentioned on here in check that here that the date which is mentioned on check is 31st of March 26 or before. It means when you receive the check, I received the check on 15th of April example. Financial statement not yet approved. Okay. But what happened that here now? They say we received the check on the 15th of April 26. Correct. But the date which is mentioned on check is 31st of March. Still, it is a non-adjusting event. So you have to see when you receive the check. If you receive the check before 31st of March, if you receive the check before, it doesn't matter where you are going to deposit that here. So here I will call them adjusting event that here, where you receive. But if I receive after 31st of March, so I will call them non-adjusting event that here. Okay. And it is also not material. I will tell you why. One example will come that here. In case of a non-adjusting, we'll say no, we will disclose in approving authority report directorship. It is not relevant. I tell you why. When you I will explain it through an accounting entries of it. That don't worry that I will discuss with you that here. Okay. So here remember this point. Okay. So when you receive the check is important. If you receive before 31st, when you deposit, it doesn't matter. If you receive check here after 31st March, it's a non-adjusting event. If you receive before 31st March, it's adjusting. But remember this, okay? One example, one question, we are going to solve it here today only. I will tell you the accounting entries for that as well, okay? The last point here is what? Last point is what? Disclosure. So they say information required for event after the balance sheet date. We have to disclose what? Nature of the event, like the fire, bankruptcy, whatever, okay? An estimate of the financial, how it will affect my profit that year. Or if I am not in a position, it's a statement that such estimate cannot be made. If I cannot make an estimate how much this event is going to affect my profit, so we have to disclose that I am not in a position to tell you what effect is going to come in my profit and loss account. That's so simple. Okay. So quickly, if we'll cover it, will not take revision that here. Now, any event, okay, first of all, that here, let me cover from here. Introduction that is, if any accounting standard deals with the provision that is not going to cover AS4 that here. Okay, now here they say contingency is covered by AS29. If it is a contingency loss, if probability is more than 50%, create a provision. 50% less than that, call it a contingent liability, mention in notes to account. If remote possibility, no treatment. Contingent gain, we record only when it is virtually certain. That example, the MacBook. Okay, now event occurring after the balance sheet date means any event happen after the balance sheet date, but before the approval, we call them event occurring after the balance sheet date. There are two types of event, adjusting and non-adjusting event. Adjusting event means that here the condition was existed on balance sheet date. Example, the trade receivable. I knew that on balance sheet date his financial position is not good, which is confirmed by the bankruptcy information that is. Okay, so adjusting we have to account it. Okay, the non-adjusting event means the condition was not existed on balance sheet date. Here we just have to disclose it where in approving authority report. Example, the director's report. In special cases, event indicating ceases to be going concern. Event happen after the balance sheet date before the approval, but if the event is so severe that affect my going concern assumption, in that case, I have to prepare the financial statement on the basis of realizable value that will cover in framework chapter. Dividend declared after the balance sheet date, we are not going to account on 31st of March. We will disclose where in notes to account. Bank dated check, which you just have to remember that when you have received the check, okay, only that time it is going to be recorded. If you receive the check after 31st March, then we are not going to record on 31st of March. It will be treated non-existing event that year. Okay, disclosure, what is the nature of the event and how it is going to affect the profit and loss. So that is all about accounting standard 4. Now what we'll do that here now, we will cover the question on accounting standard 4. Question number 15. While preparing its final account for the year ended 31st of March 2021, a company made a provision for bad debt at the rate 5% of its total trade receivable. In the last week of February 2021, a trade receivable for rupees 2 lakh had suffered a heavy loss due to an earthquake. The loss was not recovered by an insurance policy. In April 2021, the trade receivable became a bankrupt. Can the company provide for the full loss arising out of insolvency of the trade receivable in the account for the year final account for the year ended 31st March 2021? Okay, now listen carefully. Now what happened that year? Year ends on 31st of March 2021. We made a provision for doubtful debt at the rate what? 5%. So we made a provision. What will happen in April? That trade receivable become what? The bankrupt that year. So it's an adjusting event. Why it is an adjusting event? Because the condition was existed on balance sheet date. And here in that, they say in the last week of February 28, trade receivable for which suffered heavy loss due to earthquake. So the earthquake happened. Now please don't get confused here. Okay. In February here, earthquake came, and that year in the trade receivable. Okay. My trade receivable suffer a loss. Trade receivable of rupees 2 lakh, not loss. I have some trade receivable of rupees 2 lakh. Earthquake happened in the month of February, okay, and then we made a provision of 5% only. Now here what happened in April, that trade receivable become bankrupt. Now event occurring, and we assume that approval date has not yet come. So event occurring after the balance sheet date and before the approval, yes, okay. Now condition was existed because we made a provision of 5%. Earthquake happened here that year, okay. So don't get confused. Don't call it say earthquake if happen after the balance sheet date that year now, okay. Then that's a different scenario. So they see that here now. Here, if you see that it has, as per the accounting standard 4, asset and liability should be adjusted for event occurring after the balance sheet date that provide additional evidence to assist estimation of amount relating to the condition existed at the balance sheet date. So full provision for bad debt amounting to rupees 2 lakh should be made. Why? Because he's bankrupt now. So we cannot recover the amount from him. So we'll make a provision of rupees 2 lakh complete amount. Okay. Now loss due to insolvency in the final account for the year ended 31st March 21. It is because earthquake took place before the balance sheet. Now earthquake took place here. So condition was existed that year. Okay. Now had the earthquake taken place after 31st, if suppose earthquake happened after 31st of March 21, then this would be treated as what? Non-adjusting event. Because what? Because why? If the condition was not existed on balance, if the earthquake happened after balance sheet date, in that case, if it is material, then we have to disclose in approving authority report. But here the condition was existed on the balance sheet date. So instead of creating we have already created a provision for 5%, but we'll change it and we'll make a provision of complete amount of rupees 2 lakh. Okay. Now question number 16. Now they say here, Neil Limited has its corporate office in Mumbai and sell its product to stockists all over India. Now on 31st March 2013, the company wants to recognize receipt of check bearing date. All these are keywords. Listen carefully. They say check bearing date is the 31st of March 2013 or before. I am not saying we received the check. It means the date which is mentioned on check is of 31st of March or before that. Okay. They say as check in hand by reducing trade receivable. So the check in hand is shown in the balance sheet as an item of cash and cash equivalent. All checks are presented to bank in the month of April 2013 and are also realized in the same month in normal course after depositing in the bank. State with reason whether each of the following is an adjusting event and how this is affected to be disclosed by the company with reference to the relevant accounting standard. Now, two situations, listen carefully. Check collected by the marketing person. This keyword, marketing person. Check collected by the marketing person of the company from the stockist on or before 31st of March. What they were doing, then I will come to point number A and B. They are saying that when they receive the check, if the date which is mentioned on check, listen carefully, with the date which is mentioned on check that year, on or before 31st March, then they pass the entry even though they receive the check after 31st March. Okay. So what is the correct treatment I discussed with you? The correct treatment is that here, when they receive the check, actually then only they have to pass the entry. Okay, but they receive the check after 31st of March. But if the date is mentioned of 31st of March or before that, then they pass the entry check in hand account debit. So what they do that here, they pass this entry here. They pass here check in hand account debit and they credit to trade receivable account. Trade receivable account. This entry they pass. Okay. But what is the correct treatment? We have to see actually when we've received the check. So in first case, this is check collected by the marketing person of the company from the stock is on or before 31st March 2013. Collected. So correct treatment. They have not yet deposited check. They will deposit check in April month. No problem. But they receive check on 31st March. So this is correct treatment. It's an adjusting event. Okay. They can do that because they have already received the check. But the check sent, they have not used the word receive. So whoever is the sender, they send the check sent by the stockist through courier on or before. Someone is sending, that does not mean we have received the check. Okay. So it means they send the check on or before 31st March 2013. It is not mentioned we received it on 31st of March 2013 or before that. So we receive after 31st of March. So that's why it's a non-adjusting event. But what happens in case of a non-adjusting event, if it is significant or we call them material, then we have to disclose it. Where we have to disclose it? In approving authority report. But it's a non-adjusting event, but it is not significant, or I can say it is not material. Therefore, no disclosure in director's report is required. Why it is not material? Let me tell you. What entry we have passed? They have passed here. It's the first of all, if suppose they are not passing this entry first of all, it's an adjusting event. Here it is correct. Here it is correct that here they have to pass. Just give me a minute. They have to pass this entry. No problem. No problem. Correct. Correct treatment. Now it's a non. Here they don't have to pass this entry because it's non-adjusting. But should be disclosed in approving authority report? No. You say why? Because there is no material effect. I tell you why. Check in hand is a cash and cash equivalent, correct? And that is a part of current asset. Trade receivable is also part of current asset. Okay. So I'm not passing entry, but overall it does not affecting my current asset. I tell you why. If you see under current asset, cash and cash equivalent come. Trade receivable also come under current asset. Okay. As per schedule 3. So current asset, under current asset, cash and cash equivalent and trade receivable both come. If I am not passing entry here in second case because it's a non-adjusting event. But it's okay. Overall current asset will be same. Only what will the effect that here because of this check in hand that here in future my check in hand will increase and trade receivable will go down. But both are the part of the current asset only. So overall current asset will be same. That's why it is not material that here. Okay. Therefore, no need to disclose in director's report. Simple. You remember that I discussed with you these items that here, this one. Okay. That a backdated check. Okay. Now, next question number 17. What it says that here, state with reason how the following event would be dealt with in the financial statement of Pradeep Limited for the year ended 31st March 2013. An agreement to sell a land of for rupees 30 lakh to another company was entered into on 1st of March 2013. So this is a point here. Okay. So they enter into agreement that here on 1st of March 2013. Enter agreement to sale. Okay. Now the value of the land is rupees 20 lakh. So the agreement to sell land for rupees 30 lakh. So they are selling the land of 20 lakh at rupees 30 lakh. It means they are going to make a profit of 10 lakh. Okay. But here the value of the land is shown at rupees 20 lakh in the balance sheet on 31st of March 2012. So here that they have shown as a sale of land. Sorry, not sale of land. They show as a land is shown in the books of account on 31st of March at 20 lakh. Okay. Now, however, the sale date was registered on 15th of April 2013. Remember these three dates that here. Okay. So first of all, what is the agreement to sell? They enter into agreement to sell on 1st of March. Okay. Now on balance sheet date, it is still appearing in the books of account, but that should not be appear. I'll tell you why. Okay. Now the sale date that they have entered 15th of April. Now agreement to sale already the condition was existed on the balance sheet date on which is confirmed by the sale date before the approval. Sale date happened on 15th of April, which is confirmed by this event occurring after the balance sheet before the approval. It's an adjusting event because the condition agreement to sell was already entered earlier before the balance sheet date. The condition was existed. It should be recorded on 31st of March. Okay. It's an adjusting event. Let me write it down. Adjusting event. So simple. honestly, I'm telling you, it is easy through these revision series. It is easy to score 60 plus in advanced account. Easy, very easy. In fact, if you work hard, that if you have done your regular classes or if you have joined some exam oriented batch here anywhere that year, and if you honestly, if you understand each and every concept, easily to score 80 plus in advanced accounting, honestly. And it is a this is a subject in which you can score maximum marks that year. Okay, and that will help you to clear the group when it's come to the aggregate. Okay, now point number B, the negotiation with another company for acquisition of its business was started on 2nd of February 2013. Negotiation. We want to acquire some company, but the negotiation was started. Pradeep Limited invested rupees 40 lakh on 12th of April. Understand? Negotiation is just not an the condition exists. Okay, the reason is that negotiation is normal. We can do the negotiation multiple people. Okay, so therefore they say it's a non-adjusting event. But this is material. We are doing the investment of 40 lakhs that year. Okay, so which is confirmed on 12th of April that year. So it's a non-adjusting event because negotiation is not that it is a condition one. Is negotiation we can do with multiple people that year. Okay, so they say it's a non-adjusting event, but it's a material item. So we have to disclose it. Where we have to disclose in directors report, that approving authority report, directors report. Simple. Okay. Now last question. What it says that here now, a limited company closed its accounting year on 30th of June. So when they close the books of account, 30th of June, this is balance sheet date. Okay. Then they say here that the account for that period were considered approved by the board of directors on 20th of August. So 20th of August is the approval date. Okay, it means any event happen here, any event happen between these two dates, what is event occurring after the balance sheet, then AS4 is applicable. But they say the company was engaged in laying pipeline for an oil company deep beneath the earth while doing the boring work on 1st of September 21. What is the approval date? Please, 20th of August that year. Okay, and when they were doing the boring work on 1st of April 20, 1st of September 21, it had made a rocky surface for which it was estimated that there would be an extra cost to the tune of rupees 80 lakh. You are required to state with reason how the event would be dealt with in the financial statement for the year ended 30th of June 2021. So understand that here. When the year ended 31st of June, it's a non-adjust. Non-adjust means no. I mean, the AS4 does not apply here. Now, the question of adjusting, non-adjusting comes when you talk about the AS4. AS4 does not arise here. Why? Because event happened after the approval. So whether the AS4 is applicable here? No, after the approval, whether the AS4 is applicable here? The answer is no. Okay. So we are not going to account on 30th of June 2021. So that is all about accounting standard 4, that is contingent in event occurring after the balance sheet date. So daily we are going to cover one accounting standard, and don't worry about any accounting standard. You are going to enjoy all the accounting standard. People are very afraid of AS15, then EPS, the income tax, each impairment, all the lease. Okay, all these accounting standard we are going to cover, and I promise you, I will simplify it like never before. So simple, chap. So simple. This advanced accounting syllabus is that. So simple is that here. Okay. Just you have to understand the concept that here and believe in yourself that here. Okay. And don't worry about the people, what they say you that here. Okay. And I strongly recommend to all of you that here, especially before the examination, that avoid the negative people. Because when it is surrounded by the negative people, if they say anything to you, any wrong thing to that, oh, you cannot do that, or maybe they are not telling you directly you cannot do that here, but certain time the body language, people talk like that here, that they basically some negative comment when they pass, it is going to affect, 100% is going to affect you that here. That's why I say that especially before the examination, try to isolate yourself as much as it is possible and communicate with your very close friends. Okay, those who are going to boost you or motivate you, or your parents, your siblings that here. Okay, not more than that. That is enough. That is enough. And you just have to concentrate on your study. And so many things will come in your mind before the examination that here. The one of the things which is very common and which is very bad also that here, which is the self-doubt here. You doubt yourself that here when the result extra. Suppose you didn't clear in past that year, when the result came that then when you saw that you didn't clear the examination, suppose that year. So then next time you're doubting yourself, you are not able to do that. No, you are able to do that here. What is more important that here is consistency. Consistency is key to success that year. You just have to be consistent, be positive that year, and focus on your study. Honestly, I'm telling you, you can do miracle. You can do miracle that here. Okay. So you don't know how much potential you have. I am telling you that here. You don't even know how much potential you have. You have so much of caliber. You are a very bright student that here, and you can do a very in every subject you can do good, but you have to be very disciplined. Whatever you're doing consistently, you have to maintain that here and be positive that here. Then see the result, what will happen that here. And honestly, that if you didn't clear the examination pass, that does not mean that here that is a end of that particular attempt that here. Okay, that is not the end of life that here. I know so many people that here, okay, they didn't clear the examination first attempt. Okay, they take multiple attempts to become chartered accountant. Now they're so much successful. They're the high post that here. Okay, they're running the big companies there. The future is so bright that here. Your future is so bright. But what you have to be positive that here. Concentrate on your study that year and see what will happen that year. And when you doubt yourself that year whether I'm able to do it or not, I'm telling you that year you can do it, and 100%. Even though you are not sure, but I'm 200% that year. Yes, you can do that. But here you have to really work hard and consistent, okay, and be disciplined. You should maintain a proper discipline that year, and just be focused on your study, and 100% you're going to clear the coming attempt. Okay, that is for today. Take care, all of you. Bye bye.